else. You're going to golf, you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
We're in a pretty good place. The U.S. economy is gliding into year-end in a pretty good environment right now. Corporate America seems to have absorbed the tariffs pretty well. The consumer's doing pretty well. We do expect the Fed to come in and cut rates in December. That would be a nice tailwind as we head into 2026.
Lie, lie, lie. Lie, 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 lie.
Exactly what it is. Now, welcome. Wednesday, next week, I believe is when they're going to be telling us they're going to give that 25-point rate cut. But let's talk about that rate cut. Everyone just thinks, well, 25-point rate cut, that's going to be great. That means our mortgages are going to go down. I can get a house now with a lower mortgage. I can buy a car with lower rates. I can my credit cards are going to go down. This is going to be wonderful. And they've been touting this, again, for about 3-4 weeks. And that's why the market, rallied, and then of course now it's having a little bit of trouble. But let's really look at this, drill down into it. What does it really mean? Well, you got to look at some history. It doesn't always work out that way. The idea is the Fed has to cut its rate first to bring down the most important rate is the 10-year Treasury. Remember, the Fed rate is what determines the interest we're paying on our national debt. The Fed rate is the rate at which banks lend to each other. So but that 10-year Treasury yield, that's the important one because that's the one that hits the consumer. That's the one that drives the market. That 10-year Treasury yield affects your credit cards, your mortgages, savings, business loans. I can go on all day. That's the important one. That's the one that drives the economy. Now, the idea of cutting the Fed rates means that the 10-year Treasury will then come down. Now, most of the time, if it doesn't come down, the Fed will just have Treasury print a whole bunch of money and go in and buy Treasuries to pull the yields down. But the idea is, well, we can get this economy really soaring again if we just get that rate down. And you remember how long Trump has been pounding on Powell. Please get these rates down. We got to get these mortgages. We got to get people low mortgage rates. So let's go back and take a look at history. It's amazing. But first of all, the market is continuing to rally, has been rallying because of this rate cut. They're getting so excited. Now, Powell, as I said, he believes that it's going to bring down the 10-year Treasury yield, dropping rates on mortgages and so forth. But he's got to be reminded it doesn't always work that way. And the proof is, and I have the chart if you can see it right here, if you look in September 17th of 2024, what happened? Well, September 17th, 2024, inflation, now you got to get this, inflation was at 2.4%. It was above the target, above his target of 2%. So Powell says, I'm going to come in and cut the Fed rate, my rate, by 50 basis points, not 25, 50. He said, that's going to be terrific because here we're in the middle of an election. Biden, I'll help you get elected here. I'll bring those rates down. And those mortgage rates will start coming down. Auto loans, all this, credit cards, everybody's going to be happy. Don't worry about it. But the question is, wait a minute. You're going to take, and with inflation above target at 2.4%, you're going to cut rates by 50 basis points? Now remember, mortgages at that point, the 30-year fixed rate was at 6%. So the whole thing was to drive that thing down before the election. The problem was, and you can see it here, on September 17th last year, when they finally cut the rate by 50 basis points, something went wrong. It went in the wrong direction. The 10-year Treasury yield, which determines the mortgages on your house and what you're going to pay for interest on cars and so forth, went the other way, went up. And the stock market went up. That's right. Now think about this, a 50 basis point cut and the yields went the wrong way? Sure, because the bond market tells you what's going on. The bond market saying, wait a minute, what are you doing? And I always tell my students, my gang members every day, it's the only place you can find the truth is in the bond market. So the bond market said, wait a minute here. Inflation in September is above your target. Powell, what are you doing? Inflation's above your target. That's why we're not going to have rates go, the 10-year Treasury yield go down. We're going to make that yield go up because we have to. We need investors. We got to sell Treasuries. We're in terrible debt. We have deficits. We got to get Japan, China, the UK, who are now buying gold. We got to get them back here to buy our debt. They're not going to buy our debt. If you start driving these yields down, they want yields going up. They want to be paid for their risk. So the reason why it failed, inflation, as I said, in September, remained above the target. The 50 basis point cut was not near enough to stimulate the economy. The economy was in deep trouble, still is. And the deficits, this is the big problem why it failed. You have three reasons why it failed, right? Inflation, the 50 basis point was not near enough to stimulate the economy, and finally the deficits. Our deficits keep going up. Our deficits are a problem. They never cut expenses. We talked about that yesterday. The reason why we're always talking about inflation, always fighting inflation, talk about 24 hours a day, 7 days a week, inflation, inflation, inflation. That's all we talk about because the damn Congress will not do their job and cut. So those three reasons is why the 10-year Treasury yield went the wrong way. And it should go the wrong way. And the 10-year Treasury yield was rewarded because when the Treasury yield went up, meaning that you have to now pay higher rates for your automobile, higher rates for your mortgage, higher rates for your credit cards, higher rates for your business, they were rewarded. The stock market went up. Here, take a look. Because people, well, why did the stock market go up? Because the bond market did the right thing, for God's sakes. September 17th, the S&P was at 556. It rallied 9% to February 19th, went to 607. Now, why would it rally with yields going up? Because the idea was the bond market was calling it right. Hey, we got to get yields to go up to get UK and Japan and China away from gold and come back in and be our lenders. Without them, they're our three lenders. We're screwed. And as of today, we're screwed. Why? Because remember, Trump has to borrow, he has to get rid of $7 trillion in debt every year for the next 4 years. And wouldn't it be nice you can go and borrow at 30 years or 20 years? You can't do that because, again, China, Japan, UK are buying gold. But getting back to the point, so remember this when it comes next week. The reason why it didn't work in 2024, the reason why yields went up instead of down, and the reason the stock market went up 9%, because the bond market does what's right. And the bond market's saying, you are nuts if you're going to start cutting rates when you've got all these problems. You haven't solved your Fed target yet. You're way above your Fed target. At 50 basis point, are you kidding? You can't fix this economy. You can't stimulate the economy with one 50 basis point cut. And the deficits keep going up and up because you politicians, you won't do the right thing and cut. So that's why we, the bond market, went against you. Now let's compare to where we are today. Will that happen next Wednesday? Well, let's compare. Where are we? Well, inflation September 2024 was above its Fed target. 2025. Is inflation, are we still above our target? Yes. We're worse now than we were in 2024. We're much worse. We're at 3%. That's a long ways from 2%. We're worse now than we were in 2024.
5 minutes.
2, 50 basis points. They said, hey, that wasn't enough to stimulate this economy. We're cutting just 25 basis points. So why would we be so lucky to think if 50 basis point didn't work September 2024, why the hell would 25 basis points work in December 2025? What are you, nuts? This is crazy stuff, man. And finally, we're in worse shape now than ever. We can't borrow money. One, because our debt, our ratio of debt is insane, okay? Because we're at 168%. We're only supposed to be at 65. So our lenders want really more interest because they're taking a risk. Our debt ratio is insane. 128%. It's supposed to be around 65 the most. So now that's a big problem. So all those things that were bad last year is worse this year. So why would the rates come down? So you got people buying stocks like crazy. They're trying, because they think, oh man, this market is going to really take off. But remember, the market took off in September 17th, 2024 to February 19th. Why? It went up 9%. It went up. So this is going to be, Powell is going to be taking a big risk here. And he's a dope. And I shouldn't pick on him. Everybody they pick for this job, it's a political job. And the worst person we ever had was Aunt B. Aunt B. She was the worst. Aunt B. What the hell is her name? Yellen. Janet Yellen. She couldn't have been. She was a terrible treasury. She was terrible head of the Fed. She was just terrible. All right. So let's keep going here. So we know when Wednesday comes, we are facing components that are worse now than they were back then. All right, so we have a failed monetary policy. Now, when that occurred in 2024, that's a failed monetary policy. Why is that important to know? Because with a failed monetary policy, you go into stagflation. And we are in stagflation. We are. I talk about it all the time. It just grinds me that they talk about, oh, we're not even in a recession. Anyway, okay, so here's what's going on. So inflation, as I said, in September was 2%, 2024. Today it's 3%. It's worse. So I don't know how they're going to get away with this. Now, the other problem we got today, okay, as far as the economy goes, the sentiment is really bad. Now, Trump and his team have done a terrific job. So why is it that the sentiment is going against him? It's going against him as far as households, the economy. He's done great things. For 11 months in office, he's done more than Powell could have done in 1,100 years. So as far as the economy, the sentiment is against Trump, even though he's accomplished, okay, he closed the borders. He's reducing all this crime in the cities. He's reduced corporate taxes. He cut inflation from 9% to 3%. He's cutting these terrible regulations that were killing us. He doubled the standard deduction and remember, and he doubled the child tax credit. We have no tax now on tips, Social Security, no more woke, especially in the military, no more men in women's sports, no more transgenders for everyone. That's all gone. And recruitment finally for our services have going gangbusters. Okay, but it's not, the question is, for Americans, is it helping me on Main Street when I go to the supermarket? Is it helping me with when I pay my insurance? Is my health care, the great Obamacare? We got to pass it to see what's in it. We don't want to show you it, but we'll pass it, and then we're going to stick it right up your nose, okay? And that health care, everybody knows, that is awful, awful. Health care, most bankruptcies are over health care. So when we get back, let's take a look at what the consumer really believes and how is that going to affect the stock market. Talk about that when we get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back. So again, next week, Wednesday, they're going to come out with a rate cut. What caused the 10-year Treasury yield to go the wrong way last year, September 17, 2024, was, again, even 50 basis point wasn't enough to turn the economy, okay? And the deficits, again, were running so high, they felt that they got to raise rates. If you cut the 10-year Treasury, you're out of your mind. We got to raise them so we can get Japan, China, UK lending to us instead of buying gold. What are you guys doing? You got to be out of your mind to raise to cut the Fed rate, to cut the 10-year Treasury yield. Who's gonna come to the auction? Obama? Now, why would we be so lucky to think a 25 basis point cut now, 2025 will do it, when in 2024 they had 50 basis points cut and it failed. The Treasury yield went up because they said with 50 basis points, that is not enough to fix the economy. 50 basis point wasn't near enough to stimulate the economy. We're going to do 25. So that's why it failed. Now, when we go next Wednesday, it's worse now than it was back in 2024. Now, as far as the economy, the sentiment is against Trump because everything that has to do with the consumer is upset. Now, all the great things Trump has done, he should have went in the reverse. He should have got the economy so people feel good. They wake up in the morning, but they don't feel good when the consumer inflation is up 22.4% from 2020 to 2025. They don't feel good that food since 2021, wages since 2021 is up 20%. Food is up 24%. If you go out to eat, it's 27%. You're going to pay 27% more now than you did back in 2021. Shelters up 50% since 2050. That's only 10 years ago. Even from 2021, it's still up 24%. Paycheck to paycheck. People are living paycheck to paycheck, and it's getting worse. It's increasing, not going down. Living from paycheck to paycheck has gone up from 46% to 68% in 24 months. This is nuts. And the reason the real estate business is so bad, and the reason you can go buy a builder home, a brand new builder home, cheaper than you can a pre-existing home, is because people aren't selling. Why would they? 78% of the folks hold a mortgage less than 5%. 55% of the mortgages in this country, 55% mortgages are below 4%. 23% mortgages are below 3%. We're at 6% now, 6.5%. Application denials. This is what's really good. You want to know how good your economy is? And they're saying, oh, God, man, we got to cut rates, right? We got to stimulate this economy. So let's get the 10-year Treasury yield down. Are they nuts? Who the hell's going to lend to us? When they look at our economy, mortgage application rejections are up 23%. Mortgage refis are up 46%. The rejections up 40%. That's unheard of. It's historic. Auto finance rejections up 15%. Credit card applications. Whoever got denied going into a credit card, up 21%. Our workforce is a total 170 million, right? Yeah, we have 164 million that are working full-time, but we got 290,000 people working part-time. But here's the real problem, this damn AI. We have, think about it, 170 million. Our workforce is the size of 170 million. Only 17 million are AI workers. And that's where all the emphasis is. That's where everything they do in this economy, everything Powell does, everything the president, all for AI. We have now multiple jobs, 8 million. That's historic. Historic. That's insane. Job cuts. I just gave you one number we just got today. Here's another one. October 2024 to October 2025, we had 3 times the amount of job cuts between 2024 and 2025. So let's do it this way. I screwed that up. We have 3 times the amount of job cuts between 2023 and 2025. JOLTS, That's the important one I look at all the time. We've gone from 10.7 million down to 7.4 million. So here's what's going on. So again, take a look at here. Take a look at this chart. Look at the applications, how they're being denied. Look at this. Look how they're spiking through the roof. Something's seriously wrong, right? Now take a look at this chart. You're gonna like this chart. This chart here. Look at this. The price of food and shelter have outpaced wages over the past 5 years. Look at this, just going nuts. Look. Now you want to know why. All the great things Trump did and his team, and they are terrific what they're doing, but it's not hitting the wallet right now. It will eventually, especially if they keep getting oil prices down. That will, but it takes a long time. Just like when you cut an interest rate or raise an interest rate, it takes 18 months. You cut a rate, you don't get any benefit. You don't feel it for 18 months. So all the stuff that he is doing, especially in oil cutting, bringing more oil up from the ground, more oil, which is, he's doing a fantastic job of that. We're, again, drilling back in Alaska when Biden and those green dopes shut that all down. But it takes time. So take a look at these market crashes, just to remind you what can happen when you got a dope like Powell, okay, doesn't know what he's doing. And instead of raising rates to get rid of the inflation we have, you've got to get rid of that inflation. Inflation is a cancer. And nobody in their right mind would be cutting rates when your target is 2% and your inflation is 3%. That's why I'm fearful that we're going to repeat what happened the other day in 2024, September, that yields are going to go up. That means everything's more expensive. That means inflation's going to go up. So take a look at this chart. In 1930, the market went down 47%. The next one, 1937, 39%. 1974, over here, nobody ever remembers that one. I talk about that one all the time because, man, what was going on in 74 is just like what's going on now. Anyway, 74, 30% drop. The next one, right here, this guy was 2000, and that was 2018, that one. That went down about 15%, not much. But let's get to the big boy here. 2008, 38%. 2022, 20%. And remember, on that chart I just showed you, the reason why the market dropped after it went up is because of the fact of the tariffs. And tariffs are raising holy hell. Remember that. So it's always good to look at that, because you know why I look at that? Because it reminds you, when you're trading, if you don't know how to sell short, you're screwed. Because you know what it takes when the market goes down, like it did here, well, let's go back here. Let's go 2010, all right? So when the market went down in 2008, when the market went down 2008, 38%. You know what you got to get to break even? You say, oh, 38%. No. I would guess that, tell me if I'm right, Willie, what's that about? You would need about 58%? Almost 60%? Almost double?
About 45.
45. 40. When was the last time you made 45% return in your 401k? When was the last time you got a 45% return? Are you nuts? So you got to take these serious. And most people never look at these. I watch them all the time, look at them all the time, just to remind me, to put my head right. Man, we could go through this again. I got to make sure I'm making some real smart moves here for my gang. You know, keep them on the right track. And because that's serious, because nobody thinks about that. You lose 30%, you got to get back 45. How the hell do you do that? You don't. So today, again, let's get rid of this one.
5 minutes.
Okay. And we just did it with price of food, just did that one. Okay. And we did this one, so we're good to go. All right, let me get this. So that's good. All right, so that one's gone. All right, so the big problem we're having is this, the sentiment, right? Because the question is our economy better now or in 2024? As I said a moment ago, there's no real single or factual yes or no, because we have strong pockets and we have weak pockets. So, but now when you go and look at all the things Trump did, as I told you, gee, that's good. But what's not working is labor. Labor's not working. Our economy's not working. The only thing that keeping our economy going is they continue to lie. They continue to keep increasing, right here, the M2 money supply. They just stopped with QT on December 2nd to get all this money out, not all of it out, but get a lot of the assets out, okay? Let me just show you here, my M2 right here, Fed M2 right here. Look at this, the amount of money, since 2008, look how much money they put in. What is that, 8 trillion? 8 billion, I'm sorry, trillion. 8 trillion. From 8 trillion to where we are today at 22 trillion.
3 minutes.
Are you nuts? That's insane. That is what keeps this market going, because by doing that, they can push money to the CEOs to buy their own shares back, to make the market look good and convince everybody. And when you listen to them, I mean, just listen to these people, what they say, how they lie. Listen to what they're saying right here.
How should we, this is like a new, is this a new normal?
Andrew, I'm sorry.
Retail sales at Johnson Red Book up 6%. I do not think the consumer is in dire straits by any means.
He's not in dire straits by any means. Let me ask you a question. Do you think somebody's in dire straits when they're filing bankruptcy?
2 minutes.
And if bankruptcy is increasing big time, okay, how could they say something? But it doesn't matter. What they do, Wall Street, okay, in our Congress, they know the trick. As long as they keep increasing money supply, keep shoving money into the banks, banks keep taking the money given to CEOs, they keep doing stock buybacks, they can sell the folks, everything's wonderful. Even though our total debt is 100 trillion, our national debt's 38 trillion, our corporate debt's 22 trillion, household debt, historic 18 trillion. The debt has increased from 2008 to 2025, 278%. The U.S. deficit, I was talking about a little bit ago, that the reason they didn't want to, the reason why it didn't work in September 2024, when they cut the rate by 50 basis points, the 10-year Treasury went the opposite way, went up, is for the same reason today. Because our deficit spending is nuts. Congress is spending 130% more than their income. And that's still going on since September of 2024, September 17th. So that policy failed of cutting rates, to the Fed rate, to bring down the 10-year Treasury yield, to bring down your mortgage payments, to bring down your car payments, to bring down your business payments. We're worse now. We're worse now. I hope I'm wrong. I hope that we get this big rate cut. But even if we do, you know what's going to happen? Let's say the yields don't go up like they did. They go down. We're only going to get worse. It's putting a Band-Aid in. The market's going to rally. And everybody's going to be happy. Then we're going to give it all back. You've got to learn how to sell a stock short. Then you don't care about any of this, nor do I. All right? We'll help you with that. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's